What is going on, traders? Quick update today on a position that we discussed pretty comprehensively yesterday on our Monday day trading mastery call. Euro Swiss over here. I know many of you already took this one. Some of you managed to get into EURCHF and took profit on that yesterday. Good work. Let's break this one down and show you how I'm going to be managing this setup, right? So if you're new around here, yes, lots of charts on the screen. We don't use all of them at the same time. So jump over here. Let's make my big lovely, we'll make my big lovely face a little bit smaller. How's that? What did we have yesterday when we took this setup, right? We had a big, beautiful bearish engulfing candle here on the daily. So this gave us in this overall downtrend, run, pullback, run, pullback. We got some resistance between the 20 and 50 EMA zone. Big bearish engulfing, and price looked like it was breaking out of this upward sloping trend line, this little triangle formation that we had here, an ascending triangle. So we'll have a look at that, be more obvious on the lower time frames. Actually, let's make my, why not have my big dashing face a bit bigger there, right? Let's jump down to the lower time frames. So we've got the weekly, monthly up here, not paying too much attention to those. They weren't giving us too much. We had bearish engulfing on the monthly and so on. But the strategy that we have here, this is a simultaneous break and retest of the 4-hour 50 EMA following this. This is that beautiful triangle pattern that we're talking about, right? Similar highs, similar lows here. Now there was a little bit of like kind of stop loss hunting up here and up here, but this is a reasonable resistance level. Now we weren't paying too much attention to that. We weren't taking it as like a breakout pattern. We had already taken it after the breakout had formed, right? So connecting lows, lows, lows. We could see the lows were getting higher. Break, retest, simultaneous break and retest that 4-hour 50 EMA. Fib retracement 0.382. Same picture on the 1-hour time frame. I really like these ones where the 1-hour 50 EMA and the 4-hour 50 EMA coincide. So and the 0.382. When those all line up, we can see right at our entry right here where the red meets the green. That was our entry price right there. Red meets the green right there. We can see both those EMAs were pretty much at the exact same point, right? Which is really nice. So we saw this high test candle form. I took this as I did take this one as an entry order. So the entry order was taken right here. I probably should have signposted that. Right, that is EO triggered. That was our entry price here. Stop loss up behind 0.618 fib retracement, and now we're trading down towards the bottom of the triangle here. Right now we can see fib extension. We can refine that a smidge because we've had our pullback. Fib extension requires 3 points. It's the high and the low, and then where was the second high, right? So more of this in the curriculum. We put more of a focus on how to draw it, but we draw it up to here. Now I didn't have that data point until price started breaking down, and we can see fib extension 1.272 happens to line up perfectly with the lows of this of the triangle here. So this is where our ultimate profit target is. Now I've put this zone here. This is my profit taking zone, which means that at this point my management is going to tighten up quite aggressively, and I'll start either trailing behind the 5-minute structures or so market structure, or trailing behind the 5-minute 50 EMA. So if price were to close behind the 5-minute 50 EMA, I'll just close the position. But at the moment our profit target is set down here. That's our ultimate profit target, maximum profit target. If price smashes down here, you beauty, will take profit. But once it reaches this level, we're going to start tightening our boots. If we can get the position, if we close out anywhere here, happy with that. So it'll be anywhere between 4.66 is our ultimate profit target, or else all the way up to here, maybe 3.08, something like that. If we get anything more than 3, this position I would consider a success or a successful position. Now why I wanted to do this video right now is because I'm at the next stage. This is where my stop loss was up here. We had removed some risk. So original stop loss was up here, right? Risking 1% of our account on our prop firm account. So I just recently passed another 200K prop firm account. So be risking $2,000 equivalent on this trade if that were to pull back. Now we removed 90% of risk here, which means that instead of 2,000, we had maybe 400 or $200 left on the trade. 400? Whatever the math is, yeah, left on the trade, and now we're due to update this again. So my trade management methodology between once we've got a large position like this, you can see we're maybe halfway, a little bit less than halfway to our profit target. So I'm being a bit looser with my stop placement, right? So what we can see is prices run down here. I'm looking at trailing behind highs. Now I trail behind a high when a low gets broken. So you can see price ran down here. Let's zoom in a little bit. Price, as it broke down here, we didn't really form any highs. I wouldn't consider this a high. I wouldn't consider this a high. These were all lows. The real high happened here. We can see price kind of pulled back here. And now once the low is broken, I trail behind that high. So we can see that this is just exceeded. Now this is again a 1 hour time frame. This 1 hour candle is taking some time to develop. Hopefully it will close below there, but my trading plan is if it exceeds kind of generously, even within the 1 hour candle, that has broken that low. Even though it looks like it's testing it, some of you traders out there might be saying, well, this actually could be forming a low test on this kind of double bottom. Maybe. But it has exceeded that. So at this point, this is where I'm going to go ahead and update my stop loss to here. So now what that means is, it's still called a stop loss. But with terminology of what that is if price were to pull back to this level, it'll close out the position for that amount. Now, because that's within the green zone, it is a profit. So what we do is we can go and measure that there. So if it were to pull back right now and hit that line, which is, I'm going to update this in my terminal, I would bank 1.05% profit, which is just over $2,000 on my new 200k prop firm account. Of course, I've got them set up to with trade copies to multiple prop firm accounts, but again, if you're trading $1 million account, that'd be a $10,000 position. 200k account, $2,000 position. $20,000 account, it would be a $200 position, and so on. However, that would be okay. It would be a bit sad only banking 1% on this one, but ultimately my profit targets are down to hopefully 4.66, or anything beyond 3 is going to be nice down here. Which all in all we can ever do is do some robust analysis on a setup, and if the setup is, plays ball, great. If it doesn't, well, that's fine. Trading is all about trading a profitable edge. So it's not about, we can't predict the future. We don't know what, price action is mostly random. There is structure to it, and there is nuances to it, which, positions like this, even if we're banking at a 4.66, if I'm winning 1 in 5 of these, that's awesome. If I'm banking, 1% out of 3 of them, and then on 1 of those 5, then I'm taking a loss on. That's okay. That's still trading a profitable edge. We can't predict the future. As traders, our job is not to predict the future. It's all about understanding the likelihood and the probability of where price is going to go next. Probability is not a certainty, and if you can't predict, if you don't have a certainty, then you're not really predicting the future. You're just kind of playing a likelihood game here, right? Just like, anyway, we don't need to go into any further. So that's that setup. Really like this one. EURCHF, we do have retail news coming out later today. If you're a fundamental junkie, then retail news, retail sales out of the US, where that will quite likely influence Swiss franc and the euro. Swiss franc being a risk, another risk-off correlated currency to the US, and euro and US. These are the largest trading partners when it comes to the forex markets as well. So overall, that's the breakdown of this setup here. Really like this one. That's that. This is for our ProTrader members, but if you've got your hands on this video and you're not part of ProTrader yet, jump on. We're running a 7-day free trial at the moment. Come if you want to learn how to trade professionally, as we are doing here. Feel free to give us a go. Click the link below, click the link wherever it is, go to protraderx.com and learn how to trade professionally. Secure outside capital via prop firm accounts, get a $200,000 account, learn to leverage a skill, highly profitable skill, to be able to source that outside capital, and then take positions just like this. When they're this solid, this is a fantastic position. I broke it down before I even took the setup as well on yesterday's call, Day Trading Mastery, and learn how to do this. And this one trade. The worst case scenario that's going to happen now this is on my new prop firm account, not across all my accounts. Worst case scenario is we're going to make $200,000 on this one. $2,000 on a $200,000 account, which the prop firm split is I keep 80% of that, and the prop firm keeps 20% of that. So it's good. It's good. Life is good. Business is good. Anyway, go check it out if you're not a trader yet, but interested in learning these pretty simple concepts. If this has been confusing, it's because you haven't gone through the curriculum where we break each element of this down piece by piece by piece. Enjoy. See you over there.